Okay, this is going to be a weekly recap from the 16th of May to the 20th, and I only had 5 trades. This was, I believe, my first week trading with a $20 risk level, and I feel like with this week's trading, I'm going to stick to a $20 risk level the following week, and then if it happens and I do a lot better, I think at that point I'll try to raise it up to 25 and then continue to increase as long as I'm seeing that I'm trading well. If I see that I'm not doing well, I'll stick to this $20 risk level. Or if I end up doing really bad, if something really dumb is happening, if I'm just breaking rules or doing something crazy like that, of course I'll have to lower it. Ideally, that doesn't happen, but this was pretty much a scratch. I made a very evil amount of dollars, and most of these were scratches, but a few of these I think I could have traded a lot better and been more profitable, and there were a few setups that I did not trade that I could have been in, that I hesitated in. And yeah, let's just go over this week's trading. I had 5 trades. 4 of them were green. That was a 80% winning percentage rate. But again, when there's only 5 trades, there isn't that much data. And 60% of my trades were according to my $20 risk level. My average dollar gain was pretty small, but in terms of difference, it was a lot bigger than my average dollar loss, which was just this one trade, and my average percent gain was better. I'm seeing more and more of these trades that I'm getting above 3%, which is good. I want to continue to keep doing that. I was struggling a really long time trading and getting setups that are actually nice in terms of percentage. And my average, I guess, position size at least was bigger than this one. Losing trade, it would have been pretty bad if maybe I traded a $1,000 position here and that would have made it a red day or something like that. But as long as you stick to a dollar risk level, that's not going to really happen. And my average time in the trade was about the same as this one that didn't work out. Not too bad. Let's go over the setups one by one. Starting with NWBO, the first trade, the only trade that didn't work out, or at least was not, profitable. Let's look at NWBO for the 16th. And the 16th is right here. It's not really a significant red day, but I guess one thing to take into consideration is that this was trying to hold this level here at 75 roughly, and it broke under it. Let's go ahead and take a look at the 16th, which is right here. And I was in at 9:58 a.m., 150 shares at 7292. So 9:58 was right here. 7292 is when I got in. And why did I get in? Well, in theory, this was a morning panic bounce play. It dropped from this 80 level. It got as low as 73. It had to move towards VWAP, and that was it. But it was then, trading back and forth here. I never had much of an interest in trading this because it just seems like there was a lot of selling price action. It just wasn't looking good. But then I thought when it got to the day low, which was right here, it even had a few wicks. I thought maybe it's going to try to hold support, and perhaps whoever has a lot of shares is not going to be able to break below the support level, and then it can try to make a move towards the upside again, especially after having this big massive red day not too long ago. So, it's not likely, but it's possible that it can try to have a rebound day. And as you can see, this setup did not work out. I got out at 10 o'clock at 72.33, which was right here. I got out at 72.33. So I got out right here, and it's pretty good that I got out of it as soon as it got to my risk level, and that was fine. And, had I have decided to say, oh, well, it's not really breaking my risk level, or maybe I become hard-headed and I don't cut the trade, this would have been pretty painful. So, yeah, that was one thing to take into consideration. And then I did trade it again, it seems like. Let's look at the next setup with NWBO. This was now considered the official morning panic bounce play since this one was so tiny. This one was more proper, a little later in the day, but still very nice looking. I was in at 10:14 a.m. at 6390. 10:14 was right here at 6390. So it seems like maybe right after the move I started to get in it right here, and it was hard, I think, to be a part of this move right here, but it did play off with his round number of 60, so that was pretty good. I got out the next minute at 64.39. So not really much of an uptrend right here is when I sold. And let's just take a look at my notes. I just didn't feel easy holding on to this setup. And I do have a note that perhaps I could have sold half of my position, which could have been possible. I could have sold maybe half of my position here when it was sketchy, and then hold on to the other half when it breaks maybe the support level right here or even the day low. And that would have allowed me to sell the other half for a slightly higher price level, but it did eventually make a move towards VWAP, so that's pretty good. It was a scratch for what this one was, and I didn't trade enough shares. I think this was my first day trading a $20 risk level, and I was totally off on how many shares I was in this. And for this one right here, I only traded 50 shares because the goal for me, because I didn't get the very bottom, was to just be in half or maybe in this case a third of what I thought was a $20 risk level, trading 150 shares. And I probably wanted it to come back near the day low and then buy the rest of my shares, but it didn't do that, and it just continued the uptrend, and I sold because I didn't like the price action. I think it was a good attempt for what it was, and it was just that I didn't, again, get a part of this overall price action right there. Let's look at the next trade, which is a morning panic bounce play again with NWBO on the 17th. So the 17th is right here, not a significant red day, but it looks like it did offer volatility. I was in at 9:42 a.m. at 67. 9:42 right here at 67. So sure, I didn't get the very bottom right here, but it seems kind of hard to trade this one. The way it's kind of sketchy, but I did get in right here at 67 at 9:42. And this one did get to 69, which isn't that much, but at least it did get past VWAP. I got out at 9:46, 67.17. 9:46, 67.17. Let me zoom in actually a bit more. I got it right here near the bottom. And I just probably didn't like the price action, and I wasn't in it right here in the ultimate turnaround level. So it was probably a bit more shaky for that reason. But this was a good example where I could have, I guess, sold in pieces. Let me see if I did sell in pieces. Okay, so I did sell in 2 pieces. Okay, yeah, now that I remember this, I did sell, I think, half of my position here at 67 at the bottom, and I did sell a piece in the 67, I think 3 level. It did get a bit higher, but it didn't offer the best move, not the best setup here, but this is something that I've been trying to do, is selling in 2 pieces, unless I'm cutting losses quickly. I think that can help me be a lot more profitable in the future. Let's look at the next trade, which is morning high day breakout with SYXX. Let's look at SYSX for the 18th. The 18th is right here. Not a very significant looking day, but let's go ahead and highlight it. I got in at 9:44 a.m. at 696. So right here, 9:44 at 696. Why did I get in this trade? I got in this trade because it was trying, as you can see, the break past the 7-cent level. It tried here, and then it finally looked like it was going to do it. So at 9:44, I did get in right here at 696, and it did actually break past the level, but I don't like how it just jumped. And even though it did ultimately get a bit higher to 74, I just don't like this price action here. I'm wondering when I sold. I did sell the next minute at 723. So I did get out here. Right here is when I got out. 723. Looks like I got out. Yeah, 945. I got out at the very tippy top right here at 723. I just probably don't like how, you know, it broke the level. It was trading this range and broke the high of this morning channel, and it was around number 7 cents, and it just shot up, and I probably didn't feel that comfortable. This is another example where I could have tried to, even though I sold at the very top right here of this candle, I could have sold half of my position and then try to hold on to the other half and then maybe risk it Maybe cut it if it breaks this level right here, but then it would expose me to sell it for a bit higher when it broke this follow-up level at this 734 level. But yeah, that was a good attempt for what it was. But again, this is another example where I could have sold in two pieces and I would have felt better. Even if I wouldn't have sold as well as I did here, I would have given it more exposure so that if it were to have continued the run and actually do a reversal, maybe get to this 8 cent level, I would still have a position left. And that's something I need to continue to work on. Let's look at the last trade, RMSL. Very similar setup, high day morning breakout. Let's look at RMSL for the 20th. Yeah, this one's very impressive. I'll be looking at this one this week for any potential morning panic bounce play setups. That's something I look forward to. And this is the 20th, so let's highlight it right here. I got in at 1018, and that was at 399. 1018 was right here. 1018 is when I got in at 399. So I got in right here. Pretty similar to SYXX, although as you can see, it did kind of break this level right here at 393, and I was going for that breakout past the round number 4 cents. As with SYXX, it was around that 7 cent level, and this one did get a bit higher, not too much higher, but pretty similar setup. Other than that, it did top here and it topped here and it broke out of it, but I was looking at the follow-up breakout over that round number, and this was a pretty cool trade to be a part of, but I wasn't happy with the way I traded it. And again, that was with my entry, I believe, right here at 1018. I got out 1020 at 4, so that was pretty much a very small difference. I got out right here at the bottom. I probably just felt uneasy with the price action. It probably wasn't uptrending the way I wanted it to be. I thought it was going to be more explosive. And I remember seeing a lot of people selling their shares after we broke past this 4 cent level, and that made me feel really uneasy. And I got out of my entire position. And I think what I could have done better was to have, sold half of my position when I felt pretty uneasy and then hold on to the other half, and I would have given it more chance. If it were to have failed and broken this level, I wouldn't be cutting the trade for a loss with all of my shares. It would just be half. And this one did get to 41. It didn't get much higher, but if it got to 42 or 44, I would have been pretty salty that I got in right at the breakout level. And then I sold immediately because I didn't like the price action, but then it started to work later on. And this one didn't break that 4 cent level until much later in the day, but I would have had a much better chance to sell while it was still uptrending and maybe start selling into this price action here once we started seeing some red candles. I need to get a lot better with that. I need to try selling in two pieces, and I think that's going to help me be a lot more profitable. I'm going to stick to a $20 risk level, and yeah, that's pretty much about it. Not many trades. I'm going to call it off right here. I just need to be patient trying to sell in two pieces. Of course, if the setup fails and I have to cut losses, I'm going to sell that immediately in one piece or whatever I have left. I need to keep getting better, and I'm thankful to God that I see where. And once again, that's it for this weekly recap right here.